Astral's prospects are improving, and that has translated into a better financial outlook. South Africa's largest poultry producer expects its first half headline earnings per share to surge by at least 300%. That's as the impact of the devastating bird flu outbreak and load shedding wanes. These factors contributed to Astral reporting its first ever operating loss last year. The firm says a further trading statement will be provided in April. Lower platinum group metal prices have weighed on Impala Platinum. The mine expects to report interim headline earnings per share that are at least 20% lower. The announcement comes alongside a production update. During the first half, a group-wide 6-element PGM output increased 18%. A statement from the group describes this as strong. Absa is growing its footprint. The banking group has opened a non-banking subsidiary in Beijing, making a foray into the key Chinese market as it ramps up its international expansion. Absa CEO Ari Rautenbach says the office, which will be officially launched in May, will allow the group to support domestic Chinese clients who are in pursuit of deals in Africa. Ely says it will go into business rescue. That's after its attempt to acquire Bundu Power failed. The firm was hoping to secure bank financing to proceed with the transaction, but lenders turned down the company's application. Ely's had pinned its hopes on the Bundu Power deal to return it to profitability. With that now off the table, the company says it will start voluntary business rescue proceedings. Ely's has also announced that its interim results publication will be delayed. The firm was due to open its books by the end of this month. Solid demand from the U.S. has helped stabilize the diamond industry and has seen polished prices increasing again. That's according to De Beers CEO Al Cook. But he warned that as the prospects for economic growth in major economies remains uncertain, that it may take some time for rough diamond demand to fully recover. Those comments accompanied the release of De Beers' first sales cycle data. It's raked in $370 million, which is nearly 19% less than last year. Itala's ambitions of being a fully fledged bank have been dealt a heavy blow after a repayment administrator was appointed to look after its affairs. The Reserve Bank has named Johan Kruger as the development agency's repayment administrator following a court order in December. The move essentially begins the process of winding down its deposit-taking activities. Further afield, Danish company Novo Nordisk shares hit new record highs after it reported fourth quarter operating profit above expectations and also forecast another year of double-digit sales and operating profit growth due to its popular weight loss drug Wegovy. Let's take a look at this package report for more.
Demand for Novo Nordisk's weight loss drug Wegovy shows no signs of fading. The Danish company reported Wednesday that fourth quarter operating profit beat expectations. It also forecast another year of double-digit sales and operating profit growth. The news sent its shares to new record highs on Wednesday morning, cementing its position as Europe's most valuable listed company ahead of fashion giant LVMH. Novo is now worth more than $487 billion. The firm said it was pleased with last year's strong performance as demand soared for Wegovy and diabetes drug Ozempic. Looking ahead, it expects sales growth this year between 16% and 25%, and operating profit to potentially rise up to 28%. Novo has raced to increase output amid shortages of Wegovy. It said it started gradually increasing the supply of the lower dose strength of the drug in the US in January. The results highlight Wegovy's success and Novo's lead in the fast-growing obesity drug market even as competition grows. US firm Eli Lilly is among the leaders in bringing a rival product to market.
While the Eurozone might have avoided a recession, however, the outlook for that economy remains gloomy, and its biggest economy, Germany, isn't showing signs of a recovery. Let's head over to our reporter Ndawuleng Lachela for a look at the factors weighing on that region.
You're absolutely right. Now, Germany has long been seen as the engine of Europe's economy, but as of late, the country has become the sick man of the European continent. And joining me now with on-the-ground insight is Lars Halter from Deutsche Welle. Thanks for your time today. Now, Lars, just walk us through who has been most affected by Germany's problems.
Thanks for having me. Well, among the countries most affected by the economic weakness in Germany are our Eastern European neighbors, Hungary, the Czech Republic and Slovakia. And that is because over the past few decades, they have built up a large auto supply sector that sold heavily to Germany's once mighty car sector. That was great business for a while, as long as Germany was a leading nation on the world's auto market. But now, as that sector has shifted and car makers from outside Germany, including Tesla, but also France and even China, have taken over market share and cut into sales for brands like Volkswagen, BMW and Mercedes-Benz, now those ties have become a drag on their economies. The problem, of course, is those countries, Hungary, Czech Republic and Slovakia, are already suffering from other economic problems. Last year, inflation in Hungary stood at 25%. Interest rates have been jacked up. In the Czech Republic, wages have been down for 8 consecutive quarters now. So weakness in Germany affecting those countries just adds to their problems.
And what are the economic ties between Germany and these European neighbors?
Well, they're strong, and while they are certainly important to Germany's economic balance, they are especially important for the Eastern European countries. See, the Czech Republic and Hungary rely on Germany for 1/3 and 1/4 of their exports respectively, with Slovakia sending 1/5 of its exports there. Poland is another country in the region that trades with Germany, but it's a lot less exposed because of the strength of its more diversified domestic economy. Their exports, for example, are much less dependent on car manufacturing. To put a number on all this, these days German companies have annual revenues of around 250 billion euros in Central Europe. They employ about 1 million people directly and many more, of course, through suppliers. So in those neighboring countries, that obviously creates strong dependencies.
Lastly, Lars, what can the neighboring countries do? Is there a way out of this crisis?
Well, some companies there that have been extremely reliant on ties with Germany are trying to tap deeper into other overseas markets. Some are also trying to branch out into industries like defense. However, that hasn't been easy given that we are seeing multiple geopolitical uncertainties with the Ukraine war, Middle East conflict. It's hard right now to forge new relationships, but they're trying. I've heard from one gentleman, a top-level manager at Hungary's Alap Group. They provide management services for car and aerospace clients. They're apparently trying to make up for a decline in Western European markets by ramping up orders from Asian clients. Meanwhile, the Czech Exporters Association says that they're looking for new markets within Europe, but that such a shortfall as they're urgently experiencing right now cannot just be replaced in half a year. Long story short, companies in the Eastern European market are working their way out of too much of a dependency on Germany, but they're in for a bumpy ride.
Well, we'll keep a close eye on how everything develops on that end. Let's leave it there. Always appreciate your insights. That was Lars Halter from Deutsche Welle.